Toll Brothers, the nation's largest luxury home builder, reported an unexpected first-quarter profit this morning. Analysts say the company made significant headway in terms of cost-cutting. We're joined live now from Horsham, Pennsylvania, by the CEO of Toll Brothers. He is Doug Yearley. Doug, great to have you here on Street Smart. Let's talk about the cost-cutting that you guys did. What specifically, and will that need to continue?
Well, we've certainly cut some costs. We've also been able to lower some incentives, which came through on a higher gross margin, which was encouraging. We'll keep trying to cut some costs out of the home building, but the biggest thing right now is for demand to improve and for us to have some pricing power and drive the price up. That'll help the margin the most.
Any signs of that, Doug? I mean, do you look around the corner and see demand improving? Do you have more people coming to look? Do you have more people considering it, looking for financing?
Yeah, things feel a little better. Our spring season just began. We're in the middle of a national sales event that just started last week, and we had a great week, a little bit better than last year, which was a great week. The key is that it continues for a couple of quarters, so the buyers gain confidence. Last year, there was a lot of demand that was pushed forward because of the tax credit that expired in May. This year, it feels more like organic demand that is natural, and maybe that's a better thing for us. So the demand's not being pushed forward. It feels a little better. We'll just have to see how the next few months play out. We're cautious because last year we felt great, and then, of course, May things dropped precipitously. So we're cautiously optimistic right now.
What makes you so cautious at this point, Doug? Is it still the labor market? I mean, you guys tend to play into a higher end market here. What is it that makes you a little concerned when you look at the outlook here?
Well, I think the buyers are still concerned. Yesterday's consumer confidence numbers were fabulous, highest number in 3 years. So that felt good. But I think the buyers are still not sure that housing is back, that housing's a decent investment. They're getting ready. They know it's a great time to buy a house. But, the confidence isn't quite back yet. They still have concerns about the economy. Housing has to get us out of this. Housing got us into this mess 4 years ago, and we need housing to lead us back out. So we need a couple of good quarters of sustained demand to feel better. But right now, it feels pretty good for us.
Doug, do you think there's anything Washington can do? I mean, besides another tax credit, which a lot of people think now what looked, I don't know about the word disastrous, but it looked bad in hindsight. Do you think there's anything else Washington could do to increase demand or to bolster people's confidence going forward?
Yeah, I think right now what they need to do is back off. There's talk about reforming GSEs. There's talk about cutting back the mortgage interest deduction. And, our buyers hear that. And so they're concerned about whether their mortgage interest will be deductible, whether mortgage rates will go up with no GSEs. This is not the time to be touching any of that. We need housing to get on firm ground before we even talk about what to do with GSEs and mortgage interest. So right now, I think the best thing to do is back out, let housing heal. We're on our way. And once we have jobs again, because housing creates so many jobs, then we can talk about those other issues, but not now.
Doug, I'm curious what you are hearing from Washington. As you say, there is a lot of talk about, the mortgage interest deduction. There's a lot of talk about what to do with Fannie and Freddie. Is it just talk at this point? Do you think nothing ultimately will happen in the next few years? I mean, I know you say it shouldn't at this point, but do you think nothing will ultimately happen based on what you're hearing out of Washington?
Yeah, I don't think the mortgage interest deduction gains traction. 65% of our country owns a home. I just can't imagine that gains any support. But, the GSEs, there's a lot of talk about what to do to reform them. I think the discussion will be deliberate. I think it'll be thoughtful, and I think it'll take a long time. And I think that's encouraging. I think President Obama's made that clear. And again, right now, we just need to back off and let housing bring this economy back.
But bottom line, though, you're still for stuff like the mortgage interest deduction, and you're still for the U.S. government kind of backing home ownership as an ideal.
Absolutely. Absolutely.
It couldn't have gone any other way, that answer, Doug, could it?
No way.
Well, because what happens, Doug? I mean, if they do go away, let's just play out the scenario. Do you think then the housing market comes undone?
It hasn't in other countries.
No, I don't think it comes undone. Yeah, I don't think it comes undone. I just think the timing would be terrible because, again, we're coming out of this, and it would be piling on. Right now, this is not the right move. There's no question if you can't deduct your interest on your mortgage, and if the government's not backing most mortgages out there, Well, your rates are going to go up, and it's going to cost a little more on a monthly basis to own a home, and none of that's going to help. And I think, the American dream is still home ownership. And again, I just don't think it's going to gain traction. I think we'll be fine, but it's a conversation right now that we don't need to have.
I just want to, quickly, you said that you guys have scaled back some incentives when we were talking about cost cutting. Any chance that that's going to have to turn around to kick up demand at some point?
No, I don't think so. We don't base our home prices based on cost plus. Our prices are based completely on what the market will pay. I just think the market's going to firm up as confidence grows, as the economy gets stronger. People need to be able to sell their existing home to move into our homes. I think it's just going to take some more time. We're headed the right way, and unemployment's coming down, consumer confidence is going up. We don't need turmoil in the Middle East, of course. We don't need the stock market having a couple of bad days. But overall, the macro data is improving, and that feels pretty good.
Doug, good to talk housing with you and get your outlook. We really appreciate it. Doug Yearley, everybody, Toll Brothers CEO. Doug, thank you.